Hey, it's Patti Scharf, CPA and co-founder of Catching Clouds, the leader in e-commerce accounting. Today, I'm going to help you demystify accounts payable and accounts receivable. So let's just jump in with an example and get started. All right, so we've got Bob here. Bob is selling some stuff, okay? In order for him to sell some stuff, he needs a buyer. So we've got Tom over here who's buying some stuff, okay? Tom has some cash sitting in the bank or wherever. He doesn't want to just trade cash for the stuff, or he doesn't want to write a check or something like that. He wants to actually pay on account or on terms. So what this means is he's going to set up an account with the seller, Bob, and Bob and Tom are just going to agree, hey, I'm going to pay you in 30 days instead of today. And Bob is like, cool, that's cool with me. In fact, what I'm going to do is I'm going to sell it not just net 30, which means he would have to pay in 30 days. I'm going to sell it to 10 net 30. And that means he will get a 2% discount on the purchase if he pays within 10 days. Otherwise, if he doesn't pay in 10 days, he just pays the full amount by 30 days. Okay, so Bob sells the stuff to Tom. See, now Tom's got this stuff in his hot little hands, and Bob has a sales invoice. So the invoice is basically the same document whether you are the seller or the buyer. It just kind of depends on, its interpretation depends on who you are. So for Bob, it's a sales invoice. He records a sale and he has this asset on his books called accounts receivable. It's because it's an account and he's expecting to receive some money. Okay, so not so crazy. And then for Tom, he has a bill, also called an account payable, because he's supposed to pay it to Bob, and so he records it as supplies, and now he has this liability on his books that he will need to pay. So it's a debt to pay, okay? Now, Tom decides to pay Bob. So he takes some of his cash and the bill becomes no more. He sends some cash over to Bob. Bob gets paid in full, and voila. There's no more account payable, no more account receivable because they have been paid off. And at the end of the day, Bob's got sales on his books, and Tom's got stuff in his hands, supplies that he's going to use in his business. And he has a little bit less cash because he gave that to Bob. Okay? That's all it is. It's nothing crazy. It's pretty straightforward. So if you have accounts receivable, it means your customers owe you money. If you have accounts payable, it means you owe some other people money. Let me give you a little example. At the end of every month, what we'll do for our clients is we will send them a list of what's called the aged payables. This is basically just a list of any of the payables that have not yet been paid. Okay? And this report, this just came out of Xero, shows a list of all of their different vendors that they owe money to. So ABC Furniture, they owe $1,150. Smart Agency, they owe $4,500. Of this $4,500, $2,000 came from April, $2,500 came from May, so on and so forth. So you can see how much money is still owing to all the different vendors and specifically who they owe money to. So we actually will send this to our clients at the end of each month and ask them to review this and just make sure that it makes sense, because we're not the ones who are actually engaging the smart agency. So we don't know what bills should necessarily be on there. We only know what we've got and we only know what we've recorded. So if there's something drastic that might be missing or something that is on here that they know they've paid, that can open up a dialogue between our accountants and our clients and just go, wait, no, something went wrong somewhere, and we can troubleshoot that and fix it. And then here's an example for aged receivables. So same thing, we send a list, and this is a list of all the customers who haven't paid yet. So we can see, hey, you know, City Limousines, they have not paid since March or earlier. So maybe don't loan them any more money. Maybe cut off their terms. Don't give them credit anymore. So that's the whole point of accounts payable and accounts receivable. I hope this helped. If you like this video, please like, comment, and share. If you haven't already, please subscribe, and we'll catch you later.